I'm Brian Anderson, and today we're going to talk a little bit about why people say annuities are bad. And it's kind of funny to me because if everything these guys say is true, or if it were true, then annuities wouldn't exist. They're not a bad product. You just need to understand them, and if they work for your situation, they can be great. I think one of the biggest reasons why people say they're bad is, for the most part, I believe they're sold the wrong way. Okay. If someone comes to me and says I need to find a place for $150,000 to invest it and protect it, what the average annuity salesman is going to do is they're going to try to get every single penny of that money, and that's not really a prudent approach to any set of assets. You never put all of your money in one place. Okay, so the result of what most of the guys selling them are doing is that they're selling annuities that are too big. So most people are putting too much money into that product without a clear plan as to how it's going to work for them. Okay. Also, what happens, they sell a lot of attached riders, which the income rider, you guys should know by now, I'm not a big fan of those. The long-term care riders really don't give you the great payout that you think you're going to get. And what that leads to is to a false perception that the annuity itself is going to solve all your needs. In the webinar you guys all just watched, the series of videos, we talked a lot about the 5 keys to retirement planning. And a lot of these annuities are sold as a silver bullet, a way to solve the 5 keys. We never give you one product that's going to solve all the 5 keys. We give you a strategy that puts you in position to take care of all of them incrementally as they come. When the guys that say annuities are bad, they're going to give you an alternative. Okay, money managers are going to say, hey, bonds are great. Okay, well, what's so great about bonds? Annuities typically yield more, they give you more liquidity, and you're not exposed to interest rate risk in the same way. If the interest rates go up, the value of the bond goes down, and you're locked in a loss position. You'll get your money back in the end, but you have to wait till the end of the term, and the whole time you're going to be behind in interest rates. If you talk to a banker, they're going to say, oh, CDs are the best, they're FDIC insured, it's a great guaranteed rate, but I don't see what's so great about CDs. They pay a nominal interest, and it's a decent safe money yield depending on the market, but you don't have any liquidity privileges for it. You're locked in, and you can't withdraw money. You can't use it for an income strategy. You can't use it to derive income. It's just going to sit there baking at the bank for 4, 5, 6 years, however long you want to do it. Okay, the insurance companies are going to pay more than you can get with a CD. In any case, you'll always get more with an annuity, and you're going to get some liquidity privileges that the banks don't offer. Plus, the safety, there's differences in how the safety between a CD and an annuity work, but the result is the same, very high levels of safety. Okay, so you only need to realize one simple truth. Annuities are a great way to protect assets and receive a reasonable rate of growth. Okay. When you get that growth rate and buy the right annuity, you can do 2 things with it, or possibly more, but with respect to retirement planning, you can either perfectly optimize a portfolio for long-term growth and flexible management, or you can create a bulletproof, rock-solid, lucrative income stream that's going to be the basis of your financial plan over time. Okay? All of the safe money options, like we talked about in one of the other videos, all the safe money options can do that, but typically annuities will do it best. Annuities are going to create bigger numbers, and I don't see what's the problem with that. I don't see what's so bad. In fact, if a guy says annuities are bad and you should do this instead, look at his plan and say, can you guarantee me I'll never lose money? He'll probably say no. And then ask him, can you guarantee me that no matter what, I'm going to have penalty-free, 10% free withdrawal of my money so I can get access to a bunch of it any year I want? And he'll probably say no. The problem with guys that talk about liquidity and time frame and surrender schedules is they have a plan for you that they hope you will stick with for 10, 15, 20 years. They want to manage your money forever, and they want to give you very little access to it. Okay? So with respect to that, annuities are not bad at all, because if you look at the benefits of having an insurance-based contract, you've got a contractually guaranteed access to the money and a growth rate that nobody else can beat on a guaranteed basis. All right, so we wanted to dispel some of the false rumors today, and talk to you a little bit about that. If you have any more questions, you can certainly call us, or definitely make an appointment to get on my calendar anytime. Thank you so much, and we'll see you again soon.